In my last video, I talked about how I missed one of the biggest moves of the entire cycle. And the hardest part about that wasn't just the missed profits. It was realizing the reason I missed it wasn't because the lack of effort or lack of analysis or even discipline. It was that my entire strategy depended on being perfect, and the market is never going to give you that. So after that, I stopped trying to be perfect and started asking a simple question. What if the problem isn't that I need a better strategy, but a simpler one? One that didn't depend on perfect timing. One that didn't depend on getting everything exactly right. And that's what led me to completely rebuilding the way I approach the market, using just a few things: Bitcoin's history and buy zones. Because what I've come to realize over time isn't that I don't have a strategy, it was that my strategy depended on something unrealistic: perfection. And that sounds obvious when you say it like that, but when you are in the market, it doesn't feel like you're chasing perfection. It feels like you're being disciplined, staying patient, and doing things the right way. Because there is thousands of different strategies in markets, thousands of indicators, patterns, systems, different ways to approach the market. And almost all of them promise some version of the same thing: better timing, better entries, better exits. And I have tried a lot of them. I've tried building strategies around indicators, around chart patterns, even trying to backtest some of them so they felt more reliable, like I could trust them when the moment came. And for a while, it actually feels like you're going somewhere, like you're building something that finally works, that gives you confidence. But what I didn't realize at the time, that the more complicated things got, the more my decisions depended on getting one thing right. And that's exactly why I missed that move. And then something happened that really forced me to rethink everything. I came across a video on YouTube called "Ethereum Finally Going Home" by Benjamin Cohen. This was a little over a year ago, right when Ethereum had already dropped a lot. And in my mind, it felt like it was already cheap, like one of those moments where you think, this is it, this is where you're supposed to buy. Because when something drops that much, your instinct is to believe that the opportunity is already there, that the downside has already happened. But in that video, he was saying the opposite, that based on historical data, Ethereum was likely gonna go even lower despite having a sharp drop already. And I remember thinking, what is he talking about? Because from my perspective, it already looked like a strong buy, so I bought anyway. It didn't recover, it kept going lower, slowly at first, then more aggressively, until it actually reached those levels he was talking about. And that's when it started to click for me. Not instantly, but gradually, as I continued watching, that maybe I wasn't looking at the market the right way. Because up until that point, I was focused a lot on short-term moves, trying to figure out what happens next, trying to time entries and exits as precisely as possible, constantly looking for confirmation that I was right. But what I started to realize was that I wasn't zoomed out enough. I wasn't looking at the bigger picture. I was trying to solve the market from the inside instead of understanding it from the outside. And once I started doing that, everything changed. Because instead of asking, what is the price going to do next, I started asking a much simpler question: where are we right now? And one of the things I changed after that was simplifying everything. Because before, I was trying to track everything. Different coins, different setups, different indicators, constantly jumping between ideas, constantly trying to find something better. So instead, I focused on one thing: Bitcoin. Because at the end of the day, Bitcoin is what drives the crypto market. It sets the tone, it sets the direction, and most altcoins, whether you like it or not, tend to follow what Bitcoin does. And just by simplifying my focus, I was already fixing part of the problem. But the biggest shift came when I started to look through Bitcoin's history. Because when you zoom out far enough and you stop looking at the market on a day-to-day basis and instead start looking at it over years, you start to notice something that is very hard to see on smaller time frames. Bitcoin doesn't move randomly, it moves in cycles. Not perfectly, Not in a way where I can predict exact dates or prices, but consistently enough to give you structure. And that's what I was missing before. I wasn't missing signals, I was missing structure. Because before, I was trying to find a perfect moment in the cycle, trying to exit at the exact top, instead of just understanding where we are in the cycle. And that difference is everything. Because if you understand the phase you're in, you don't need to be perfect. So when I started looking at it differently, I asked a simple question: where are we right now? Right now is 2026, and so far we have seen downside. If you go back 4 years to 2022, that was also a bear market. Go back another 4 years to 2018, same thing, bear market. And when you start stacking those years together and look at it from a higher level, you'll begin to see that these phases repeat. Not exactly, but close enough to give us some context. Now, this doesn't mean you can go 4 years back from today and expect the exact same thing to happen. That's not how markets work. But what you can do is go back to figure out what phase of the cycle we are in. And that alone removes a huge amount of guesswork. And this is where I fixed one of the biggest mistakes I made before. Because instead of trying to wait for one perfect entry or exit like I used to do, I started buying consistently like I had done before with DCA. I began DCAing more than what I was already doing. Not trying to time the exact bottom, not trying to be perfect. Just building a position over time, because the goal isn't to be right once, it's to be positioned over time. And then I added another layer to fix the second problem I had, which was not having a clear system. Because before I didn't really know when it was a good time to buy more or when to slow down. So now I use buy zones based on long-term moving averages, which shows if Bitcoin is cheap, expensive, or just fair valued. So instead of guessing, I have a framework. So now instead of trying to predict what the market is gonna do next, I combine everything. If we are in a bear market year like 2026 and we go to the cheap zone, I'm not hesitating, I'm buying. I even allow myself to buy a bit more than I would normally DCA if we are in these zones, because I'm not trying to get the perfect bottom here. I'm following a system, and if price even drops further, maybe into the very cheap zone, I don't panic, because within this framework it's expected. And this is where I fixed the biggest mistake from my last video, because instead of trying to wait for one perfect exit, waiting for the exact price where everything feels right, I'm now gonna start doing the opposite. I'll start take profits gradually as we get to these expensive zones, scaling out basically, not because I know it's the top, but because I understand the phase that we are in. So now I'm not trying to be perfect anymore. I'm just reacting to where we are in the cycle, buying more when things are cheap, slowing down when things are fair value, and taking profits when we are in expensive and a bull market. And that alone removes so much pressure, because now I don't need to be exactly right. Now, I know some people are probably gonna say that the 4-year cycle is broken and it doesn't work anymore. And maybe one day that will be true. But if you actually look at what happened so far, Bitcoin topped in Q4 of a post-halving year in 2025, just like it did in 2021, just like it did in 2017, and just like it did in 2013. And after that, we had a bear market. And now in 2026, we are seeing a bear market again. So maybe it will break one day, but so far it has been accurate. And until proven otherwise, I'm going to continue following it. Even if you measure from the bottom of a bear market to the top of a bull market, it's roughly around 1,000 plus days each cycle. Not exact, not perfect, but consistent enough to matter. So until proven otherwise, I'm going to continue using the cycle pattern. And that's really what this comes down to. Not trying to be perfect, not trying to predict everything, but following something that has shown consistency over time. Because the market isn't about being perfect, it's about being positioned. So that's the strategy I'm currently using going forward. Simple, structured, based on history, not perfect, but consistent. That's exactly what I needed. And this doesn't just change how I invest, it changed how I view the market. Because I'm not trying to predict everything, nobody does that consistently. I'm just trying to adjust and position myself correctly over time. Now I still love doing technical analysis in more details on different coins, which I share on this channel. And if you want a video where I share how you can use the history and how you can go more in depth with indicators, macro and different stuff, let me know down below. So yeah, in my last video I talked about how I missed a big move. This is how I fixed it. So if you enjoyed the video, remember to like and subscribe, comment down below what I can do better. I love to hear from you guys, and I'll see you in the next one. Peace.